Imagine owning a piece of the Napa Valley dream. Picture yourself amidst rolling vineyards, the scent of fermenting grapes filling the air, and the satisfaction of running a thriving business in one of California's most desirable locations. This idyllic vision can be a reality. Owning a local business in Napa, Sonoma, or Marin counties offers a unique opportunity to tap into a vibrant economy, passionate community, and a world-renowned reputation for quality. Whether you're drawn to the allure of the wine industry, the charm of local boutiques, or the potential of essential service providers, these counties offer a diverse range of businesses ripe for acquisition. The key to unlocking this potential lies in understanding the local market, mastering the art of valuation, and navigating the intricacies of acquisition. This comprehensive guide will equip you with the knowledge and strategies to confidently navigate the process, from identifying the perfect opportunity to closing the deal and maximizing your return on investment. Let's embark on this journey together, turning your entrepreneurial aspirations into a tangible reality in the heart of California's wine country. The current economic climate presents a unique opportunity for aspiring business owners in Napa, Sonoma, and Marin. Motivated sellers and retiring baby boomers create a favorable market for buyers. Rising interest rates deter competition, allowing for better negotiation and financing terms. Leverage these dynamics to acquire a business at an attractive price. The stars are aligning for savvy investors looking to step into the Napa Valley business scene. It's a classic case of supply and demand. Right now, the scales are tipped in favor of the buyer. With more businesses available than eager takers, you're in a prime position to negotiate a deal that works for you, not against you. Remember, owning a business is about leverage, and in this market, you hold a strong hand. Let's break it down. As interest rates climb, many potential buyers are hesitant to take on new debt. This caution creates an environment with less competition for you. Think of it like this. You're at an auction with fewer bidders, increasing your odds of snagging that prized business at a price that makes you smile. But it's not just about interest rates. The current economic climate has left some small business owners feeling the pinch. They're looking for an exit strategy, and that's where you come in. Remember those motivated sellers we talked about? This is where their eagerness translates into a golden opportunity for you. They're more open to negotiations, flexible financing options, and perhaps even a little wiggle room on the asking price. This confluence of factors creates a buyer's market, ripe with potential for those who dare to seize the moment. Napa Valley and its surrounding areas are synonymous with world-class hospitality. Think rolling vineyards, charming wineries, and farm-to-table restaurants drawing in visitors from across the globe. After a challenging period, the hospitality industry in these regions is experiencing a resurgence, bouncing back with renewed vigor and brimming with potential for growth. Tourists are returning, eager to indulge in the region's renowned wines and experiences. This resurgence spells good news for anyone looking to step into the hospitality sector. Whether you're dreaming of owning a cozy bed and breakfast, a bustling restaurant, or a boutique wine tour company, now's the time to capitalize on this upward trend. Remember, investing in a business is about timing. Entering the market during a period of recovery positions you perfectly to reap the rewards of future growth. As the tourism industry continues its comeback, so too will the businesses that cater to these eager visitors. Imagine owning a piece of this thriving ecosystem, welcoming guests from around the world, and contributing to the vibrant tapestry of Napa Valley hospitality. The opportunity is ripe and the timing couldn't be better. Section 3. Beyond the Vine, Untapped Potential. While Napa, Sonoma, and Marin counties are renowned for their wineries and vineyards, the business landscape extends far beyond the vine. These regions boast a diverse economy, ripe with opportunities in sectors often overlooked by those blinded by the allure of the wine industry. Think essential services, the lifeblood of any thriving community. Businesses like HVAC companies, plumbing services, landscaping companies, and auto repair shops are in constant demand, providing a steady stream of recurring revenue. These businesses cater to the everyday needs of residents, making them resilient to economic fluctuations. Imagine owning a business with consistent demand, ensuring a steady cash flow and long-term stability. That's the beauty of these essential service providers. They offer a unique combination of stability and growth potential, often flying under the radar of investors fixated solely on the wine industry. Don't underestimate the power of these unsung heroes of the local economy. They represent a goldmine of opportunity for savvy investors seeking sustainable long-term growth in a region brimming with potential. Online marketplaces, your virtual hunting ground. Start your business journey online. Platforms like BizBuySell and BizQuest connect buyers and sellers, filter searches by location, industry, and price. BizBuySell offers a vast selection of businesses. Explore Napa, Sonoma, and Marin counties. From boutiques to restaurants, find detailed insights. BizQuest mirrors BizBuySell's comprehensive approach. Compare both platforms for the best match. Window shop from home and shortlist candidates. Pay close attention to details, scrutinize financial records and seller descriptions. Knowledge is power. Make informed decisions. Section 2. The power of local connections. Never underestimate the power of local expertise and connections. Local business brokers can unlock exclusive deals and insights. They possess an intimate understanding of the local market. Consider them your boots on the ground. They provide valuable guidance and facilitate negotiations. Reach out to brokers, outlining your requirements. Immerse yourself in the local business community. Attend Chamber of Commerce events and engage with local business owners. Napa, Sonoma, and Marin counties boast thriving chambers of commerce. Acquiring a business is an entry into a vibrant ecosystem. Build relationships with local stakeholders for support and mentorship. Embrace the power of community and watch your network blossom. Section 3. Unearthing hidden gems. Off-market opportunities. Some of the most enticing opportunities lie beneath the surface, hidden from the public eye in the realm of off-market deals. These businesses are not actively listed for sale, requiring a proactive approach to unearth. The rewards for those who venture off the beaten path can be significant. Directly approach business owners in your target industry and location. Craft a compelling letter or email expressing your interest. This personalized approach can spark a conversation. Networking within your desired industry can also unveil potential off-market deals. Attend industry events, connect with professionals on LinkedIn, and leverage your existing network. Building relationships can open doors that traditional methods often miss. Uncovering off-market opportunities requires persistence and creativity. Think outside the box and approach potential sellers with a compelling proposition. Fortune favors the bold, and those willing to explore unconventional avenues often uncover the most rewarding opportunities. Section 1. The art of valuation, more than just a number. Valuing a business is more than just crunching numbers. It's about understanding the story behind the balance sheet, the potential it holds, and the value it brings to its customers and the community. Think of it as a delicate dance between art and science. Every business is unique, a tapestry woven from its brand reputation, customer relationships, operational efficiency, and growth potential. There is no one-size-fits-all approach. You're investing in a legacy, a brand, and a future brimming with possibilities. Market-based valuation taps into the wisdom of the crowd. Imagine a bustling marketplace where supply and demand converge. This method uses recent sales of comparable businesses to determine a fair price. Think of it like browsing real estate listings. Compare similar properties to find value. Similarly, identify businesses in the same industry and location. These serve as data points for valuation. Imagine a master jeweler meticulously assessing a gemstone's value, examining its cut, clarity, and carat weight. Asset-based valuation similarly focuses on a business's tangible and intangible assets. This method is relevant for businesses with significant physical assets. It involves identifying and valuing all assets, including equipment, inventory, real estate, and intellectual property. Even brand value and customer relationships, goodwill. From bakery ovens to tech patents, every asset counts. Once assets are tallied, liabilities are subtracted to find the net asset value, NAV. This represents the amount remaining if the business were liquidated. While straightforward, it often undervalues intangible assets, especially for businesses with significant growth potential. It tends to undervalue brand reputation and customer loyalty. These are often the driving forces behind long-term success. Imagine peering into a crystal ball, seeking a glimpse into the future of a business. Income-based valuation focuses on historical earnings and projected future cash flows. It's ideal for businesses with strong earnings history and predictable revenue streams. Think of it like evaluating an investment portfolio. Analysts review financial statements to assess earnings potential. Key metrics include net income, operating cash flow, and free cash flow. Projections are discounted to present value, considering inflation and time value of money. This method relies on assumptions about future performance. Accurate projections require understanding the business, industry, and economic landscape. Investors favor this method to assess long-term earnings potential and align investment decisions with goals. Negotiating a business deal is like a dance, a delicate interplay of strategy, communication, and understanding. Understanding the seller's motivations is crucial. Their reasons for selling are as diverse as the businesses themselves. Some sellers are driven by retirement dreams, others by personal circumstances. This knowledge empowers you to tailor your approach and build trust. Mastering the art of negotiation is crucial for success. Negotiating a business deal is not a battle to be won, but a collaborative process aimed at finding a mutually beneficial agreement. It's about building rapport, listening actively, and understanding each party's non-negotiables while exploring areas for compromise. Approach negotiations with a win-win mentality, seeking to create value for both sides rather than viewing it as a zero-sum game. One effective strategy is to come prepared with a well-researched offer, demonstrating your understanding of the business and its market value. Highlight your strengths as a potential owner, showcasing your experience, resources, and vision for the business's future. Don't be afraid to negotiate key terms, such as the purchase price, payment structure, and transition period. Remember, everything is negotiable, and even small concessions can add up to significant savings or benefits in the long run. Be prepared to walk away if the deal no longer aligns with your investment criteria, or if the seller is unwilling to negotiate in good faith. Walking away from a deal is not a sign of weakness, but a strategic decision that protects your interest and ensures you're investing in an opportunity that meets your financial and strategic goals. Creative financing can be the key to unlocking a deal that aligns with your investment goals and risk tolerance. While traditional bank loans are an option, exploring creative financing strategies can provide greater flexibility, lower upfront costs, and even bridge valuation gaps between buyers and sellers. One such strategy is seller financing, where the seller acts as the lender, providing a portion of the purchase price to the buyer in the form of a loan. This arrangement can be particularly attractive to sellers seeking to spread out their tax liability over time or those confident in the business's continued success under new ownership. Another creative financing option is an earnout, where a portion of the purchase price is contingent upon the business achieving certain financial milestones after the sale. This structure aligns the interests of buyers and sellers, incentivizing the seller to ensure a smooth transition and providing the buyer with some financial security based on future performance. Exploring government-backed loan programs, such as those offered by the Small Business Administration, can provide access to lower interest rates and more favorable terms than conventional loans. Additionally, tapping into alternative financing sources, such as private equity investors or venture capitalists, can provide the capital needed to acquire a business, especially in competitive industries or for high-growth ventures. Acquiring a business is a journey, not a transaction. Think of it as a scenic road trip through Napa Valley. Just as you need a map for a road trip, you need a clear roadmap for business acquisition. Identify your target, like a wine connoisseur selecting the perfect vintage. Consider your passions, experience, and goals. Compile a short list of potential candidates. Use online marketplaces, brokers, and your network. Focus on well-suited options. Gather information, analyze financials, and assess the competitive landscape. Narrow down your options to the most deserving businesses. A well-defined target is the foundation of a successful acquisition. Ensure you're investing your time and resources wisely. As you venture down the acquisition path, due diligence awaits. This stage is your chance to uncover hidden treasures and potential pitfalls. Think of it as detective work, examining every piece of evidence. Review financial records, contracts, and legal documents. Ask tough questions and seek professional help. Ensure your investment aligns with your goals. A thorough due diligence process provides peace of mind. With due diligence complete, submit your offer to formalize your interest. This document outlines the terms, including price and contingencies. Be prepared for negotiation. Aim for a mutually agreeable solution. Draft and sign the purchase agreement. Have legal counsel review it. Closing transfers ownership to you. Post-closing, integrate the business and implement your vision. Let's take a journey showing how a savvy investor can transform a local business into a cash cow. You find a well-established wine tour company in Napa, owned by a retiring couple. They have a loyal clientele and positive reviews. Their marketing is traditional, relying on word of mouth. A tech-savvy entrepreneur can modernize the business, After due diligence, you buy it for $250,000. First, revamp their online presence. Create a sleek, mobile-friendly website with stunning visuals. Leverage social media for digital marketing. Use targeted ads to showcase the wine tour experience. Optimize your website for search engines. This drives organic traffic and bookings. As your online presence flourishes, you shift your attention to forging strategic partnerships. Collaborating with local wineries, restaurants, and hotels creates a mutually beneficial ecosystem, expanding your reach and enhancing the value proposition of your tours. Imagine offering exclusive discounts at partnering wineries, crafting curated food and wine pairing experiences, or bundling your tours with overnight stays at charming bed and breakfasts. These partnerships not only attract new customers but also increase customer lifetime value. By offering a seamless and unforgettable experience that extends beyond the wine tour itself, you foster loyalty, encourage repeat bookings, and transform satisfied customers into brand ambassadors, spreading the word about their exceptional experience within their networks. To further streamline operations and maximize efficiency, you embrace technology, implementing online booking systems that allow customers to seamlessly reserve their spots, manage payments, and access tour information with ease. This automation reduces administrative overhead, allowing you to focus on strategic initiatives and customer engagement rather than getting bogged down in tedious tasks. As you analyze customer data and booking patterns, you identify peak seasons and popular itineraries, allowing you to optimize pricing strategies and maximize revenue during high-demand periods. Dynamic pricing models informed by real-time data ensure you're capturing the full value of your tours while remaining competitive in the market. Recognizing the potential of recurring revenue, you introduce a membership program, offering exclusive perks and discounts to loyal customers. Imagine a tiered membership structure, with each level unlocking unique benefits, such as complimentary tastings or priority booking access. This generates a predictable stream of income and fosters a sense of community among your most enthusiastic customers. Explore ancillary product offerings, such as curated gift baskets or branded merchandise to diversify revenue streams. These additional revenue streams enhance profitability without significant overhead. Opportunity awaits those who dare to seize it. Napa, Sonoma, and Marin counties offer fertile ground for entrepreneurs seeking lasting success. Understand the local market, master valuation, and approach negotiations with a win-win mentality. Leverage insights to navigate the acquisition process with confidence. Imagine yourself at the helm of a Napa Valley venture. Picture the satisfaction of building a thriving business. Embrace the knowledge shared in this guide. With the right approach, anything is possible. As you stand on the precipice of this exciting new chapter, remember that you don't have to navigate these waters alone. Surround yourself with a team of trusted advisors, lawyers, accountants, mentors, and fellow entrepreneurs who can provide guidance, support, and encouragement along the way. Embrace the power of networking, connecting with local business owners, industry experts, and community leaders who can offer valuable insights and potential partnerships. The Napa Valley business community is known for its collaborative spirit, so don't hesitate to reach out, ask questions, and learn from those who have walked this path before you. As you embark on your entrepreneurial adventure, remember to savor the journey. Embrace the challenges as opportunities for growth, celebrate the milestones, and never lose sight of the passion that ignited this dream in the first place. The Napa Valley awaits, brimming with potential and ready to welcome you into its fold. Now is the time to take action, to transform your vision into reality, and to create a legacy that will leave its mark on this extraordinary region for years to come. Cheers to your success.